Hi, everyone. This is Jason Bjork of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's a best-selling author of many financial books. I've loved reading them over the years, including Investment Biker, Adventure Capitalist, Hot Commodities, A Bull in China, and Street Smarts, Adventures on the Road and in the Markets. He also was a very successful hedge fund manager with Quantum Fund, 10,000% returns, and he came up with the Rogers Raw Material Index for commodities. I think it's the best index for commodities. Hopefully there will be exchange trade fund for it someday. Jim Rogers, thank you for joining me again.
I am delighted to be here. There actually is an exchange traded fund with the New York Stock Exchange.
Oh, that's great. That's great. Our listeners will be very interested in that.
Well, the indexes outperform the other indexes for what that's worth. Anyway, let's start, Jason. Let's start.
Yes, especially with the agriculture prices. I mean, a lot of the raw materials for the agriculture prices have been doing very well, like coffee and cocoa lately. So I want to get your thoughts on these weak Asian currencies. We're recording this interview on Tuesday night here in Eastern Standard Time. It's Wednesday in Singapore. It's Tuesday, July 30th, 2024. I want to get your thoughts on these Asian currencies and how weak they are against the dollar. Does this remind you of kind of like the Asian tiger crisis and the currency problems that Asia had in the 1980s and 1990s?
Well, I don't know if it reminds me of that. That was a unique and pretty devastating event for many people here. Whatever it is, though, yes, there are problems. China is certainly having its problems, but most places out here are suffering a bit. Japan's stock market is making all-time highs, but Jason, the yen, gosh, I can remember when the yen was over 300, and the yen has been pretty weak recently. So I don't see any reason to make the Asian currencies go up because most of them are suffering. Maybe you know something that I don't know.
Well, do you think the weak Asian currencies, is that spurring demand for physical gold and physical silver? Or do you think that that's causing the extra increase in demand for retail investors in Asia? So Korea, Japan, Thailand, Vietnam, mainland China to want to go buy physical gold and silver lately?
Well, it's pretty simple in history that when currencies are weak, it leads to some attraction for some of their products. Yes, and especially gold and silver. I'm not the only one who knows that if a currency is weak, that one way to protect yourself has been historically gold and silver. So, yes, of course. I mean, I own gold, I own silver, and maybe I should buy some more. In fact, I know I should buy some more, just waiting for the prices to go down some. I'll probably buy silver instead of gold because silver is cheaper on a historic basis, but I hope I'm smart enough to buy both.
And also like platinum and palladium, I think they're below the cost of production right now. They are very cheap and hated too. I mean, I think they're below the cost of South African platinum and palladium miners, and none of the large miners want to actually buy platinum and palladium assets right now. So there's blood in the streets there.
So you should do it. That's the answer.
Some of my
You do it.
friends are starting to speculate there. They're dipping a toe in. Now, you wrote a book, A Bull in China. Does the retail investor in China, do they have limited options for investments for getting their money out with the capital controls, or can they actually buy some of the same investments that American retail investors can with like exchange traded funds?
Well, China still does have exchange controls, and I suggest all the time that they should open them up, and they have been opening them up a little bit in the last 15 or 20 years, but it's still a blocked currency. So, I mean, if I were China, I would open the currency today. They don't need to listen to me, and they do pretty well without me. But as far as I'm concerned, they should open it up. It is getting better, or I should say it's less bad. Chinese do get their money out somehow, always, but it's not like it should be. And I don't know why, Jason, they don't open their currency. No country in the world has been the number one economic power with a blocked currency. So I don't know what they're waiting for.
Well, their foreign exchange reserves, that goes to the government, right? To their central bank and their sovereign wealth funds. It doesn't, the purchasing power increase, if they would have opened up the currency decades ago, the purchasing power increase would have went to the Chinese people, right?
Well, you can talk to them, okay? You tell
Well,
them.
Well, I don't think they're going to listen to me. In fact, I think I'm banned from going to any Chinese airports because I made videos on the Chinese banking system a few years ago.
Well, okay. Somebody, I always mention it when I'm there and I'm making a speech or something that I would open the currency immediately, but so far nobody does it. They are opening a little bit. It's less bad than it was, but it's not the way it should be.
So, with the Federal Reserve Bank keeping interest rates relatively high, do you think we're starting to see a lot of problems with Chinese banks, Japanese banks, foreign banks with a strong dollar, losses on older bonds, and then problems in the US banking system too?
Well, I read, the problem is I don't read Japanese or Korean or any of those languages, so I really cannot tell you with any great insight what's happening inside those banks. I read, and I can read what's happening in the economies, that there probably should be problems in the Asian banking systems. I read that there are a little bit, but Jason, maybe we're going to have a big explosion somewhere in Asia, which would affect the whole world, as you well know. Unfortunately, I am not educated enough in those languages to be able to answer very well.
Now, by big explosion, do you mean like one of these hedge funds or something did like a really dumb trade, or one of those large Japanese banks thought it was Lehman Brothers and maybe gave out some really dumb loans in derivatives? Because when you were running a hedge fund, do you think that hedge funds were more efficiently hedged than they are now?
Who knows? I would know that there were some people who were successful and made money, and I know there were some people who lost money. Jason, if you look around the world, most stock markets in the world are doing extremely well. Most markets in the world are making all-time highs, except China. China, of course, had the virus and they had the real estate bubble popping. But most markets in the world, even Japan was down for 35 years. That's not a typo, 35 years. Even Japan is booming right now. So somebody's putting money into the markets. The currencies are not nearly as strong as the markets, but the people in the markets don't seem to care. I care, but they don't.
So to your point, then a lot of these stock market gains are from nominal currency valuations. They're not from businesses, the underlying businesses, what growing profits, earnings, new products or service. They're a devalued currency driving the stock market higher nominal value.
Well, what I read is that, Japan has problems. I mean, the population has been declining for several years. The currency is weak. The debt goes higher and higher. I mean, just looking at facts, I have written a couple of books. The fact that Japan is going to have is having and will have serious problems. But the stock market's going through the roof, partly because the Japanese government has given incentives for people to buy shares, and partly because the central bank has been buying shares. So people on the surface in Japan think things are great. But I repeat, the population has been declining for 15 years. And unless something happens, there's not going to be a Japan in 50 years.
I want to ask you about financial history since you also wrote a book for your daughters telling them that they should study financial history. Have you studied yield curve control and governments monetizing debt? And what do you think normally happens when governments start creating new currency to buy their government bonds?
I know that historically that does not end up well. I know that historically, if you go and monetize your debt, it is not good for your country. It is not good for anyone, except a few stockbrokers or a few investors who happen to be on the right side of the trade. So, Jason, I don't know anyone. Well, I know central banks have done it many times if they think it's good, and it's certainly good for their clients and good for their friends. But monetizing debt I don't know of any country in world history where monetizing debt has been good in the long run.
Yeah, I agree. And it seems to be the policy recently with the European Central Bank, Bank of England, Bank of Canada. They want to cut interest rates and add liquidity to the system. It looks like they're trying to do some type of financial repression or yield curve control.
Jason, you read back over central bank history, and many times I say anyway, how could they have been so dumb? But but the problem is it comes up over and over again. How could anybody have been so foolish? But the guys who run central banks, Jason, most of them are, bureaucrats or academics. They're not very smart people. That's how they get the job. They want to work for the government. In the end, I don't know many incidences where this has worked for the benefit of anyone except the central banks and them bureaucrats.
Well, they're also short-term oriented. They want to make sure that the politicians and the people running the government get their funding. Because if you talk to people here in DC, both political parties, Republicans and Democrats, I mean, no one's really talking about spending cuts these days.
Well, Jason, you just had the insight again. Central bankers and bureaucrats and politicians don't know what you and I know. That's why they're working for the government. They think that all they have to do is take the easy way and everything will be okay. I wish that were the case. Jason, oh my gosh, I would love the easy way. But I have learned throughout my life, my investing career, that the easy way is wonderful for a while, but eventually somebody has to pay for it. But bureaucrats don't care, Jason. They don't think like you and me. They think about keeping their job.
Well, especially when a lot of them now are making more money for average salaries with healthcare insurance, better healthcare insurance, and retirement benefits than people in the private sector.
Well, we can go down and look at some of the stuff that goes on at, let's just say, Washington, D.C. Yes, it's astonishing how much some of those guys make, indirectly and directly. But that's why they're there. They couldn't get a real job, so they go to work for the government, and they get easy money. I would like some easy money, but I don't think I want to work for the government. I don't want easy money that much.
Well, you're not a banker these days, Jim, so you're not on the BTFP, any of those new liquidity programs that the Treasury and the Fed have been creating.
I assure you, if I were interviewed by any of those guys, I would be thrown out of the office within an hour, within 30 minutes, within 10 minutes.
Have you ever heard of the term fiscal dominance prior to recently? Because that seems to be what a new term for what debt monetization, yield curve control, financial repression. So it seems like they're inventing new words prior to the last year or two, because in the past, wasn't it called other stuff? They seem to be inventing new words.
Jason, I'm sure there's somebody in Washington whose job is to figure out ways to cover. How can we cover this up? How can we fool people? Yes, new words are constantly coming out of Washington, other governments too, but especially Washington. And whatever the term is, I hope I haven't heard of it, but I know it's not good for us.
Yeah, I think it was called like financial repression or yield curve control in the past. I mean, they've changed the definition. When you worked on Wall Street, they started changing the definition of what inflation was in the dictionary.
Well, yes, yes, yes. They always want to make things sound better than they are. Constantly. This has been going on for decades. This didn't start this week, I assure you. And they will always be there because they're special offices to make things sound better.
So in the current system we have, is deflation and bankruptcy, does that mean the system is going to collapse and that's why they change the rules, they move the goalposts, they do all these bailout or liquidity programs?
Jason, you ask a very good question, or at least a good question that leads to something. I sat down recently and tried to do the arithmetic for the American government debt. I mean, Jason, it is stunning. It is frightening. There is no way. I have two daughters who are teenagers, basically late teens, early 20s. They're going to have huge problems in their lifetimes. I just added up the numbers. There is no way, it is humanly impossible for America to deal with the debt. The numbers are so staggering. But nobody in Washington, I don't think anybody in Washington has ever bothered to add up the debt and figure out what this situation really is. I mean, just look at the numbers. America is over $200 trillion in debt. And nobody cares. And it gets worse every day. America is the largest debtor nation in the history of the world. How can we pay the debt? How can we even effectively control the debt? This is going to lead to a huge crisis. I don't remember, but I know that Britain in the early 20s, in the 1920s, was the richest, most powerful country in the world. This is 2024. In 1924, Britain was the richest, most powerful country in the world. 50 years later, 1976 to be exact, they were bankrupt. The IMF had to fly into London airport to pay the bills because Britain could not pay the bills even. So, I mean, I can sit here and read history and I can add and subtract. And I know that in my children's lifetimes, there are going to be huge, huge economic problems, financial problems in the US. But nobody seems to care. I guess they can't add and subtract.
I think the politicians in DC, I don't think they focus on anything long term. Their idea of long term is maybe a couple years out for an election cycle. I think that's about it.
Well, you're right. November is long term for them.
It's shockingly bad how myopic everything is and short term oriented everything is now.
Well, I mean, I'm an American citizen. We're all American citizens, and the numbers are just horrific. And they cannot be paid, they cannot be dealt with. Nobody's even trying. And I know what has happened to other countries in history that have gotten in this kind of situation. It has never ended well. I mean, I wish I could tell you good news is on the horizon. I wish I could be like an American bureaucrat, tell you don't worry. But Jason, I know what happens.
So when you were a hedge fund manager, were there a lot of these leverage trades with like the yen carry trade or had it just started with the derivatives market so you didn't have to deal with all this stuff where there was an over leveraged bank or a hedge fund and it could potentially collapse the system like Credit Suisse in the last 2 years?
Well, we've had over leveraged people for a long time. I mean, one of the early collapses in my career was Penn Central. Penn Central was the AAA company, actually. It was a railroad at the time. It was a gigantic powerhouse in the financial markets and in the industrial world, but it went bankrupt to everyone's shock at the time. I guess some of the creditors must have known it was over leveraged and a problem, but all of a sudden it happened. But throughout world history, Jason, you always find somebody getting over leveraged and shocking simple people like me. Somebody's very over leveraged right now. Whoever it is you and I are not talking about, at least I'm not talking about them yet. But I know there are a lot of very, very over leveraged people out there.
Oh yeah, I totally agree. I think there was a warning back in April that there was like too big to fail hedge funds now with some of these trades on. So it's just shocking that we've gotten to these levels.
Well, too big to fail is a dangerous term because that means somebody's going to prop up incompetence yet again, and you and I are going to pay for it.
So one of the biggest and best investments you made in your career as a hedge fund manager was in the 1970s. It was covered in the book Market Wizards. You bought defense stocks when people were literally laughing at you. I remember reading in the book Market Wizards how you're sitting around a table with other bankers and Wall Street hedge fund managers talking about the time to invest in the 1970s was defense stocks. I think they were all below $5. There was blood in the streets. Do you see any industry like that right now where there's good risk reward?
Mm. That's an extremely good question. Very good question. And you make me start thinking. I don't think of anything off the top of my head, but you make me realize I better get doing a little more work because there's got to be somebody out there who, let's just think, who recently has gotten what industry's been in trouble. I mean, I don't, nothing comes to mind at the moment, which makes me realize I got to get to work because there's somebody out there that's a great opportunity for Jason and me.
Well, we won't mention one earlier. I mean, the platinum and palladium miners, the market thinks that all these electric vehicles are all the rage, but meanwhile, Ford and General Motors are losing tons and tons of money making them. So if there's going to be regular cars or hybrids, platinum and palladium, there's going to be some demand for that going forward.
Well, and I do read what's happening a little bit in electric cars and normal car, petrol cars, gasoline cars. And I was thinking the other day, I wonder who's going to pay for all this. You make me ask questions, and I'm going to have to do some more work.
So since you've been in markets a long time, are you used to like these government programs like Green New Deal and energy? ESG, I call the energy spending grift. Are you used to seeing programs like this where just the government just keeps doubling and tripling down on wasteful programs that actually produce like negative return on investment?
Jason, unfortunately, you and I live in the United States of America where politicians have bailed out their friends for decades. They've always come up with reasons to do it. They always reasons sound good. They always say, "We're not doing this for us. We're doing this for you. We're trying to help you. We're trying to help the country." And in the end, they're always trying to help their friends, and they are trying to get themselves reelected. I don't know who right now. You mentioned a couple of names. I know it's happening. I know when everybody's prosperous, stock markets around the world are all doing well, except China. And when everybody's happy, there's somebody should start worrying. You should start worrying. I should start worrying.
My last question here, I want to ask you about long-term demand for commodities. Even though China has its housing problems, housing bubbles, do you still see food and energy demand in China, India, emerging markets growing over time with like electricity demand and people wanting to eat more calories?
But Jason, we all know, I guess we all know that population worldwide continues to grow. Everybody, nearly everybody. I mean, even North Korea has growing population, or at least we think they do. So that means that the demand for all of this stuff is going to go higher. And so far, the efficiencies of most production has not been getting better and better, at least from what I read. So yes, the demand for everything is going to continue to grow. I mean, wheat, cotton, everything, oil especially. Well, oil makes the newspapers quite a lot because everybody has a car. We did have petrol cars. We now have electric cars, but everybody knows the situation in oil and gas. But other commodities all have the same situation. I mean, if you look out at the production numbers and the demand numbers, you can see that we're going to have more, what should we call them, commodity crises in the future because the supply and demand continue to get out of whack. I mean, not many people go to school these days and study agriculture. Not many people go to school and study the stuff that we're talking about. And that means we have fewer and fewer supplies, fewer and fewer guys producing, fewer and fewer people go into, well, look at agriculture. I mean, the numbers on agriculture farmers in the rest of the world, Japan's average age of a farmer is 66. In America, it's 58. These numbers are increasing the ages of farmers everywhere in the world continue to increase. I mean, you're educated. I doubt if many people that you went to school with went off to become a farmer. Certainly not in my case. Wall Street was the great attraction for many people. Well, they don't know how to grow cotton on Wall Street. So the number of people producing, the number of human beings going into commodities continues to decline. And I mean, I can add, I know that's going to lead to a problem eventually. So
Yeah.
learn about commodities.
Yeah, I agree. And on the supply side too, there's a lack of investment. The costs are rising. And then, like you said, same story for petroleum engineers, for geologists, for mining engineers. So it's not just farmers, it's all the commodity supply side people that are involved in the supply chain. There's a lot of people that are at retirement age right now. There's not a lot of young people. They seem to want to get their degrees in what gender studies or environmental, some type of environmental science.
Well, you mentioned a couple of metals recently. I mean, those people are not opening those mines anymore for the most part. It's not like it could be or should be. And unless we have a lot of copper mines, we're not going to have a lot of copper. Nickel, look at nickel. I mean, unless something happens, the world's going to face another nickel crisis down the road.
And then you have the Davos crowd, and they want to ban fossil fuels. And yet in 2023, we hit an all-time demand high in China and India and other parts of Asia for coal demand, electricity generated by coal.
Well, I know that the Indians use a lot of coal and they continue to grow and prosper and they need a lot more coal. So it's not just the Indians. Most places in the world continue to burn coal. I mean, coal is politically incorrect now, but that doesn't mean a lot of people are not using it. And most of us, Jason, if we go into the room and hit the light switch, we want the lights to come on. So if the lights stop coming on, because there's not enough coal going into the electrical plants, we're all going to be unhappy.
Oh yeah, we all want cheap electricity. No one wants to get an extra $1,000 a month electricity bill.
I assure you, we all want easy money and easy life, including me.
So do you think we're going to see kind of a similar story play out to the 1970s stagflation or 1940s? Or do you think that the central bankers and the politicians are going to maybe make things a lot worse than even that?
Well, Jason, it's a good question, extremely insightful question, one that I've been thinking about recently because I can see more and more countries are running into financial problems. At least the numbers would indicate that they're running into financial problems. More and more countries have run up gigantic debt. Very few people, very few countries are even talk about or concerned about the debt situation. So it seems to me that the world, which means all financial markets in the end, are going to have a big problem down the road. In the US, the stock markets have been going up for the longest period in American history, the longest period ever. Now, Washington says, don't worry, that's great. It's because we've got everything under control. I know they don't. I know they don't know what they're talking about. So when I look around and see that everybody is happy and that they've been happy for the longest in history, I get worried because I know enough history to know something's going to happen. Jason, it would seem to me that the next financial crisis, stock market crisis, will have to be the worst in my lifetime, the worst in your lifetime. It was very bad in 2008 because there was so much debt. Well, since then, the debt has skyrocketed all over the world, and yet markets have been going higher and higher and higher. So I said it's the longest period in American history without a problem. So, Jason, I mean, I think I'm just being logical. I know that the next time we have a financial problem, it has to be the worst in my lifetime because the debt is so very, very high everywhere, everywhere. I mean, maybe not North Korea because nobody will lend money to North Korea, but everywhere else, even China. China bailed us out in 2008, but even China has a lot of debt now. The Japanese stock market is going through the roof after 35 years. But my gosh, the Japanese are running every day. The Bank of Japan goes to money. It goes to work every day and borrows more money. Everybody's doing this, Jason. So I have to assume that the next time we have a problem, it's going to be horrible. Now,
Well,
Washington says we won't have problems again. I hope they're right.
Well, I don't know about long-term deflation, but it sounds like you're describing some type of currency event coming in the not too distant future because the people who are in charge of what the currency with the central bankers and the politicians, they don't care about maintaining the purchasing power of the currency. They want to just maintain the size of government. They don't care if they destroy the purchasing power of the currency.
Hooray, you have good insight. That's leading to what we were discussing about. It's exactly correct. And I don't see anybody worrying about it except you and me.
Well, you've read Austrian School Economics, Jim. I saw you got a medal from the Mises Institute. You know about the Calon Effect. I mean, like Calon was one of the most famous investors and bankers of all time, and they don't even talk about him on business television.
it's rare on business. Well, I don't watch business television, but it's rare that they talk about anything with any insight because most of them just are trying to get ratings. And if you can make everybody feel good, you'll get ratings. But
Well,
feeling good is not the answer in the end.
also, if you talk about the Calon effect, then you don't attack. Then you can't say that there's fundamental justification for why Nvidia shares added an extra $1 trillion of market cap. So you can't add any fundamental justification for why home prices are going up or asset or other stocks are going up. Then,
Well, I wish I had the time, or no, I take that back. I wish I was so lazy. I'd like to look at NVIDIA. I just have seen that kind of company, that kind of stock in the past, and they usually end badly. I just haven't done enough research recently, and I should do it. You're bringing up a good name.
well, are you reminded the market activity the last 12 months, 12 to 18 months? Does it remind you of the tech bubble?
Oh yes, of course. No, I have not started selling short, but I do know that that is going to happen again. The same sorts of things are happening. You see lots of new people coming into the markets, and they're calling their friends and talking about this wonderful thing they've discovered, the stock market, and it's fun and it's easy. You can make money. It's easy to make money. I mean, this has all happened before, Jason. Uh, the reason I am not selling short yet is because there's not enough hysteria. Usually, when these things get totally out of control, there's hysteria everywhere. I can see the problems developing, but it's not enough hysteria yet for me. So I'm not short, not selling short, but I'm getting ready sometime in the next few weeks or months. I hope. I hope I'm smart enough to do it.
I want to thank you so much for your time today, Jim. Keep up the great work. Also, please tell my listeners more about your commodities ETF, since we have a lot of commodities investors who listen to the show.
Okay, yes, but I'm not here to sell anything. So I own commodities. I know that commodities can be great investments at times. Many people know about gold and silver. So, RJA is a symbol on the New York Stock Exchange for the commodity index. It's possible, but Jason, I don't want to push anything. I urge everybody to invest only in what they themselves know a lot about. I wish investing were easy, but it's not easy. And please, please, please stay with what you yourself know. It's great fun to go down to the bar on Saturday night and tell a good story, but it's much better to go down there and stay with what you know. Just invest in what you yourself know and you'll be successful.
And there's a lot of great insights in your books. Also, for my listeners out there who have extra time, go and buy Market Wizards, the first one, where there's an extensive interview from Jim where he predicts a lot of the stuff that would happen over the coming decades with the U.S. federal government debt and the stock market bubbles and stuff like that.
Well, Jason, yes, but remember, I make a lot of mistakes. Oh my gosh, we could have two or three programs about my mistake. You want to hear about my first wife, Jason? What a mistake that was. Oh
We're not
my
doing
God.
a dating podcast here.
Okay, but anyway, my point is I make plenty of mistakes, so be careful. Thank you. It's been fun. I look forward to next. I hope there's a next time. Thank you.